Housing market predictions. Will real estate crash in 2021? With the end of mortgage forbearance closing in and a potential wave of evictions and foreclosures looming in the horizon, many predict that the housing market will crash in mid-2021, just like it did back in 2008. But is there a real reason to worry? Or is this actually an opportunity for the savvy investor? Join us in today's video as we explore the most important predictions for the housing market for 2021. We'll cover the why, the when, the how experts think that things are likely to unfold, and how to be prepared when they do. We'll also discuss the new trend in the real estate market that most young adults are taking advantage of thanks to more work-from-home jobs. If you want to jump into the bandwagon before it's too late, make sure to watch this video until the very end. But before we begin, remember to like, subscribe, and turn on notification bell for more amazing videos. The 2008 crash. What's the backstory? Before we dive headlong into how COVID-19 is set to change the real estate market in the remainder of 2020 and the years to come, we need to understand what causes a crash in the housing market. And what better example than the crash of 2008? So what exactly did happen 12 years ago? The cause of the housing bubble and the ensuing market crash is fairly easy to understand. The problem in 2008 was that the banks and other financial institutions started lending money to a lot of people who couldn't actually afford it. So, since there was suddenly a bunch of people with banks given credit looking to buy a house, that excess in demand drove home prices up, and the loans and mortgages went up too. Banks kept on lending more money to more people, driving up prices even higher. But the big problem was that those people weren't truly able to pay their mortgage. So after a short while facing with mounting household expenses and monthly mortgage bills, they defaulted and their homes were foreclosed. That's when the bubble popped. All of a sudden, the market was flooded with millions of foreclosed properties on sale across the country, which made home prices plummet. But could something like this happen again this year or in 2021 due to the coronavirus pandemic? Let's see what the experts have to say about that and how it could affect us. How has COVID-19 affected home prices? So the first question on everyone's mind is how home prices are going to behave in the upcoming months, and what will it be come 2021? The big reason why many economists believe there will be a crash in the housing market is because the coronavirus crippled our economy, left millions of workers unemployed and companies out of business, all while home prices are at an all-time high. Many of those people who lost their jobs have indeed been missing payments and defaulting on their mortgage. But instead of homes being foreclosed, these loans and past due rent have been piling up due to the CARES Act and the moratoriums on evictions and foreclosures. But when those moratoriums end in late 2020, the market will again be flooded with foreclosed properties on sale, which can cause home prices to fall sharply. Interestingly enough, since home sale activities came to a screeching halt earlier in the year when the pandemic first began, we've actually seen a steady recovery in home prices throughout the summer and fall seasons, even well into the winter months of November and December. This has some experts feeling hopeful that prices won't go down in the upcoming quarters. The most optimistic predict a leveling off of home prices, while others predict only a 2 to 3% dip in the coming months. But are they right, or are they failing to see the bigger picture while focusing only on the COVID-19 aftermath? After all, as you'll learn in a moment, politics also play a critical role on how things pan out, and so far, things are looking pretty grim on that front. Remote workers on the move. One very interesting trend we're seeing right now is that many people, especially those in their late 30s, are moving out of the big coastal cities like Manhattan, New York, and San Francisco and searching for more affordable housing and better living conditions in the suburbs, because now that their companies allow them to work remotely from just about anywhere. This has the effect of lower rent on single-bedroom condos and studios in big cities, and rising rent in smaller towns in the suburbs. And moving to these less populated areas is such a way to also pay less on other general living expenses, and therefore more money kept from each paycheck. If you want to know exactly where people are moving to, keep watching and we'll let you know in a minute. Home sales predictions. Most experts at the beginning of the pandemic were right to predict that home sales would plummet. Although, to be honest, that wasn't really a hard call, was it? No one could go out house hunting with mandatory lockdown measures in place, and the whole economy was basically shut down. But what's more interesting is that the forecast was of an initial 50 to 60% decline, followed by a healthy, steady recovery that would return to normal by the end of 2021. We have already witnessed some of that recovery so far with a rebound in home purchasing during the summer. But what the experts didn't count on is a second wave of coronavirus spread that would be worse than the first one and sinking our economy into a second recession during the final months of 2020. Interest rates on mortgage. Another key aspect of the housing market that has a huge impact on pricing is the interest rate. Lower rates boost buying activities and therefore creating demands on homes, and prices go up. Due to the pandemic, the Fed lowered rates to historic lows to help sustain the economy. While this has helped many people get into their dream homes in the middle of a pandemic, it has also driven up home prices, so people actually have to borrow money to get their home. Combined with the impacts of the pandemic on the economy, this can effectively be inflating the house bubble. So, after we've analyzed all this data and the trends, let's address the question of this video. Will the real estate market crash in 2021? Everything we've discussed up until now points to a very dangerous economic environment that could crumble at any minute, and, as we pointed out earlier, many economists and market analysts believe that the market will crash again in 2021. Since home prices have been increasing disproportionately compared to our average income, however, there are also real estate experts who think that the crash is not going to happen at all, even if we see a flood of foreclosures in the closing months. These specialists have one major argument against a 2021 crash: that there is roughly half as many delinquent loans than there was back in 2008. So they don't think that the end of mortgage forbearance will have such a dramatic effect on home prices across the U.S. But what they did not consider was that this could change dramatically if a second recession hits the U.S. with the second wave of virus spreads. Do you agree with those who think that we will get through the crisis without another housing crash? Or do you think that it's all just a lot of wishful thinking and that the crash is coming whether we like it or not? What would you do when it comes? Leave your thoughts in the comment section below. And if you found this video helpful, don't forget to like, subscribe, and hit the bell icon to be notified of our upcoming videos. You'll love what's coming. Also, if you want to know which counties in the country are paying up to $10,000 for people just to move there, and how the millennial workforce is moving to the suburbs and small-town America in pursuit of higher living standards at much lower cost, check out this video that's popping up on your screen right now. Don't let that opportunity pass you by. Until next time, thanks for watching.